year one was tough. It might be maybe the year two. Yeah, I think it depends on the one. Yeah, in the 2-year window, like
What they analyzing? Somebody of this.
investment bond. I like your choice.
You get it wrong with 80s rock.
That's right. Oh. Yeah, I mean, I don't know. Just about everything I run gives you about 4%. Yeah, but that's how you do it. Yeah. I'm sorry. Yeah. I mean, this whole week is supposed to be gorgeous too.
Which website are you using?
I run some bigger. Yeah, you can. The neat thing is I'm actually. All right, big office. I like that. Did you spell all off, Jim? Hey, you put in the address now, sure. Look at you at the time. We never get on the web. Oh. And then you run the RIB number on what they're, that's when that was good. Like numbers. Maybe something's gonna happen. That's right. You got a haircut. I did. Sharp. Oh, yeah. You got a haircut. I did. It's a regular
Y'all are
occurrence.
twinsies today. Good morning. Twinsies.
Are we?
Blue, you're right.
It was supposed to be Ashley, or did she switch, and then that person took Vegas Friday.
Guns N' Roses to get us going this morning.
We'll always tell you nothing, I promise you. All right, guys, let's go and get started. And somebody give me some good news.
You know what my good news was?
What is that?
Saturday, my son's white coat ceremony.
Tell us about that.
Well, most of the time, it's always in retrospect when you realize how God was at work, because you don't recognize it in the middle of it. But my son William is in medical school, and just when I look at the confluence of things that happened for him to be there with my sister, I was telling Jim, my sister being super organized and helping him. He had no clue what to do, and she helped him walk through the process to make application and all those sorts of things. It wouldn't have happened apart from her. And then Mercer opening up another campus in Columbus, which opened up 40 more places. And he did his part too, in the sense that he made a good score on the MCAT and things like that. But just very grateful for him, and to see he's flourishing, he's doing well. He made an 89 on his first real test in med school, and passing score was a 64. So just a lot to be thankful for.
Awesome.
And I went last weekend to my niece, and she graduated from RN school. Graduated with 3.7, something like that. So did quite well in school, and so I went to her camping, and then they had the graduation that night, and so that was a fun experience. And she said, "Well, just understand, Pop, we're going to take care of you now. We're great. You get free medical coverage." I go, "I've already got Medicare, so I'm good." I've already got perceptive. Cool. So, anybody? Yes, sir, Rusty.
So no matter how old they are, they never stop being your kids. My son's 36. He's done 20 years at Target, and as of yesterday, he's no longer in retail, working 80 hours a week. Weekends, nights. He's director of supply chain management at Home Depot headquarters, 8 to 4:30, no weekends.
Wow.
Time for his grandkid, time for his dad. So
Yeah.
awesome. That's good.
That's great.
Great. Anybody else have any good news they want to share this morning? Good morning.
How are you?
Good. Come on in. Who else has some good news they want to share?
Well, today's the National Hug Your Boss Day.
Oh, you're gonna do that.
Well, I'm not your boss, so that's okay. That's great. I have a question for you this morning. We're talking about this I'm reading this book right now that's called The 1,000 Little Things That Happy, Successful People Do. It's one of the best books I've read in a long time. Michelle Byers gave me this book a couple years ago. It's on my shelf. I've got a shelf, got about this many books some people gave me, said, you should read this, Jim. So I'm reading this one. And the question today was, I thought it was wonderful. It was, if I remember this correctly, what would the child that you used to be think about the adult you've become? What do you think?
And I said, the child would say to me, see, it turned out much better than you anticipated because you worried so much as a child. And see,
The child that you were would think, I like that person. Okay, great. Anybody else? Rob, what do you think? What would the child that you used to be think about the adult you've become?
Can't believe you made it that survived.
Okay, I like that. I like that a lot. All right. Who else? I can hear my grandson say, "Oh, Pop, you're an old geezer." That's what they call me, you old geezer, you. In a very loving way, though. They love their papas, schools together. But I thought that was a great question. Anybody else want to share this morning before we move on? Any good news? Sounds great, guys. All of a sudden, I'm thinking about Thanksgiving, how soon that's coming up. Maybe before we know, we're talking about what Thanksgiving looks like. My good man, what next week looks like. So, all right, guys, let us move on. Who's up this morning? Is that you, Reed? Come on,
Yeah. Danielle, I have not been drinking this morning already, I promise.
I told him to look like a banker this morning.
I know, I told Jeff, I don't know why, I just felt like putting on a tie this morning.
I haven't had that urge in a long
I
time.
know, it's, there must be something wrong. But I'm Reed with Silverton Mortgage. There's Heather, who is she makes all the magic happen, and Danielle is on the way, she's stuck in traffic. So what I want to tell you guys about, and you probably have seen this on the news, so there's a little tentative notice about what the conforming loan limit is going to change to, and you know, it's kind of a roll of dice. Usually it's a little while before the Fannie Mae will announce it, but it's going to be they think it's going to be $715,000 for the conforming loan limit this year. So it's up from the odd number. I'm glad it's an even number. I can remember 715, 647.2 was always hard for me to remember. You don't know how many times somebody asked me, and I have to go back and search to figure out what it was. So it's indicative of the, you know, the market and the inflated prices, inflation in prices, increase in prices, whatever you want to say, that's happened over the last couple of years. So, I mean, who'd have thunk it, right? I mean, I remember, the first I remember was 417, but before that, I was obviously in the threes. So, I don't know, do you remember, Jeff, what's your first?
Like 383 or something like that.
Yeah, so we've almost doubled.
Right.
You know, in probably the last 7-8 years. So very interesting time. Interest rates are a little bit volatile. We're getting pretty much steady up around the low sixes now. Even this morning, the bond market is off about 65 basis points because I think inflation came in a little hotter. They were expecting it to be a little improved on the report today, and I think it came in a little hotter than they thought. Just to give you a quick little thumbnail sketch about what happens and why inflation matters. So investments in bonds, there she is, ladies and gentlemen, Danielle right there. Hey,
I have
Traffic.
no good excuse.
no, traffic, it's traffic, it's always traffic.
It's traffic.
Yeah, but so what happens with bonds are long-term investments. So let's say, for example, that you invested $100,000 in a 30-year bond that was gonna pay you 4% interest. Okay, that's cool. But inflation devalues each dollar. So if you know that inflation is increasing at 6, 7, 8, 9%, you start thinking, well, my investment is not going to be worth 4% long-term in the future, so I'm not going to invest at 4%. You need to pay me 5% or 6% to offset. So even with inflation, I'll still get the yield that I need. That's why we're seeing interest rates go up, and that's why it matters what happens with inflation. Now, some people believe that we're going to see this thing, interest rates, top out later this year and begin to tick back down early next year. Will that happen? Don't know. I don't think it's going to happen enough that we see another refi boom like we have in the past, but you know, it could happen. Just being honest with you guys, there's so many different variables, I think, that factor in on interest rates, inflation now, that maybe we didn't see 10, 15, 20, 30 years ago. There's a lot of different more different factors that are affecting it. So anyway, what we can tell you is where rates are today. And I can tell you that God's not making any more dirt. We're actually gonna get some t-shirts made that say that, because I'm telling, is it a good time to buy real estate?
Yes.
Well, yeah, it is.
Yes.
And then the next question is, what are your plans for it?
Yeah.
Because if you're planning to hold it for the long term, you better believe it. You better buy it now, because this is the only day that you know what the price is.
Yeah.
Right?
Mhm.
And I have missed out on so many things in my life that I'm gonna wait till the price comes down. Then when I had to buy it, the price was higher. Happens to me all the time. So, any questions? Anything we can do for you
We'll
guys?
let Daniel say anything at all, you just talk the whole time.
Jim's gonna put you on the spot.
Let's see. Well, we went over the loan limit increase?
Yep.
Yeah.
Okay, well, that's very exciting. And can we offer that?
We
We don't have
don't,
to wait until next year to do that. right?
no, we haven't rolled it out yet. We got a message on Friday from the lockdown saying that they're reviewing it to see when they can roll it out. Most lenders are kind of holding back a little bit until they actually increase it. For me, it seems a little risky unless some of those lenders, they already know they've got a secret mole inside Fannie Mae that know, or FHFA, to make sure they know what the limit's gonna be, because what if it doesn't go up that high? So, are you guys waiting too?
No.
Yeah, I figured you weren't. I knew as soon as I thought this morning, I said, don't ask Jeff.
Yeah.
So you guys are already using the.
You can ask me.
Yes,
You can
sir.
ask me. We're closing those. Yeah,
One
we're
other
closing-
thing I can,
We're closing those now, and then the really nice thing is that, a lot of times jumbo rates are lower, right? So if you qualify for a jumbo loan, you can get a lower rate. We can do a jumbo loan for $700,000. Or if you can't qualify for a jumbo loan and get a lower rate, we can do a conforming loan for $700,000. And, 3% down, if you're a first-time home buyer, we can qualify 5% down, if the loan amount is 700 is pretty cool.
Yeah. Our guess is that we'll get it this week. I was telling you as of today. The interesting thing is that jumbo rates are actually lower than conforming rates. So the issue is, how much money does your client have to put down? If they need to put down less than 20%, conforming would be the way to go. But
Anything interrupts you, Daniel, go ahead.
I wanted to remind everyone that at Silverton Mortgage, we don't have any fees for VA loans. So if you have any clients, we really offer a great program.
Yep.
So,
there's no lender fees at all.
no lender fees.
Cool. Thank you, guys.
Thank you,
Appreciate
guys,
you.
enjoyed it, thank you so much.
Good morning. I was in obviously the same line of traffic that Danielle was in. Right when I walked
When
in.
you live in Buck, here's what happens, you gotta come out with the traffic. I get it. It's worth it, isn't it?
Very
Worth
funny,
it?
mister. You're not that far from me. I'm in your house. Well, good morning, guys. I'm Carrie with Thomas and Brown. We have, this Thursday at 1, we have, Kimberly's so good. We have a, I always feel like Vanna White, and I always sort of wanted to be her. Or do y'all remember the Barker Beauties on, there was a redhead, and I was like, I wanna be her. I think she was Holly. So that's what I'm gonna do right here. But we have a C class on Thursday from 1 to 4. It's called What You Say Can Cost You. And Cheryl's the instructor. If you guys haven't had a class with her, she's amazing. But it's a lot of fun. We walk through different scenarios, like where your client will say something like, my friend said I don't need a survey, what should I do? Or, but different cases like that, and then we're gonna advise like the best way to answer that and not just become an expert in every area. It's like, I don't wanna talk about rates to somebody, and y'all probably don't wanna talk about title insurance to somebody. It's just, kind of stay in your lane. And then also, with the beauty of social media and screenshotting, just kind of how to tone down when you really want to say something, but you shouldn't. So it's good. It's a fun class. So that will be this Thursday, and we hope to see you there. And then also just a reminder, our office locations, we have one here, we have Woodstock, Galleria, Alpharetta, Blue Ridge, Buckhead, and Cartersville. So we're all over for you guys. And thank you. I feel like I should have more information, but that's really it.
No, that's good.
All right, thank y'all.
Oh, so here's the update online. On your shoulder, what's next?
Oh yeah, so on the 6th, let's see,
Friday.
this coming Friday, yeah, I'm trying to remember the dates, thank you. He's having another shoulder surgery, you guys, he, bless his heart, he was on a golf trip, but it wasn't even like he was swinging, he was picking something up and it just re-pulled like what he's already had surgery on previously, so he has to have a third one on Friday, so he'll be out Friday, Monday, and Tuesday, so y'all keep him in your prayers, I feel so bad. I mean, to be in like as great of shape and everything he's in, it's like, how does this keep happening? Anyway, yes, so thank you for asking, no, seriously.
Being in the band, we have fewer shoulder interviews. All right, guys, let us move on. Y4C2Ts. Let's see. Who am I asked this morning? Carrie, what's your favorite Y4C2Ts this morning?
Oh, gosh. Oh.
Yeah, that's good.
I was like, stand by.
Stand
by. Carrie, my Care Bear. As a Libra, I really like win-win or no deal.
Right, tell us more about that.
There is always a solution where nobody has to be a total loser. And if you think outside the box and creatively, you can come up with a good win-win.
So do you think our Representative Washington could use this?
Yes.
They could use that. All of you, both sides for the meeting, no matter which side we could all use that. Win-win or no deal. I love that. That's one of my favorite ones. So guys, thank you so much, Gary, for sharing that. Foreclosures. Let me turn this off. Now, guys, foreclosures is a word that a lot of y'all may not know yet because we've had so few of them. Back in 7, 8, 9, and 10. 47% of our business were some type of foreclosure, pre-foreclosure, short sales, whatever. So guys, this is going to be taught by Corey Newton, September 14th at 11 to 12 in the lead generation room and on Zoom. So guys, come learn about foreclosure because now I don't see them being prolific anytime soon because of what?
Equity.
Equity, that's a good one. What else? Lack of inventory. We still need more inventory. So guys, I don't see this really happening, but guys, if you can do a foreclosure, come here, Courtney, talk about it. And Supreme, you want to talk about this?
Yeah, so this is so awesome. The Market Like a Rock Star, Ty Anderson, 4-time Grammy Award winner. He's actually going to get into social media in this class. So he talks about, you know, how rock stars market, you know, how does Beyonce market, how does Taylor Swift market, how do they go to market, how that applies to real estate, and then really dive deep into social media too. So utilizing that, so it's a 3-hour CE class from 1 to 4. It is going to be via Zoom. There's, you know, let me ask you, would you all like to, would you rather have it in person?
Always.
Wednesday, this is tomorrow, yeah, tomorrow 1 to 4.
Always in person.
If we can, yeah, right now it's set up for Zoom, but we'll see, and we'll get the word out. We can have it, still have, everybody can be, that wants to be here, we can still be here and have snacks and we can do it, so. Tomorrow afternoon from 1 to 4. Yeah, you really don't want to miss the content.
This is a good one, guys, because you'll learn how to from a pro how to use social media. Great, thank you for providing that for us, Supreme. Market of the Moment Mastermind. This was sold out last time. We actually are full right now, guys, but we're going to take a few more because last time we had 50 sign up, is that right? And 38 showed up. So guys, so we're going to oversell a little bit and then figure it out. So please do this. Courtney just understands this well, and she'll bring a lot of ideas to the table. So guys, please register for this. If you've not been to one before, please register because the room will be full for Courtney, as it always is. It matters who you're in business with. Now that is a big one. And it's a contract mastermind. Important time is your contract. Sherry Rispy, is Michelle with it also? Do you know? Anyway, they're going to be doing it for you guys, and they understand the contract better than anybody in this room understands it better than I do by far. So guys, please join them on Thursday, September the 22nd. MREA Masterclass Series Part 4 with Rob Daniels, good guy, great talent. Just guys, this is another thing you all have, to be with a math coach and to learn from one of the best of the best. So guys, please sign up for this. That's why I get so concerned when someone tells me, Jim, there's nothing for me. Y'all like teach stuff that I need to know. I'm thinking, what planner do you want? Because guys, there's all kinds of stuff that you can learn, from master classes to how to have an open house, guys. So we're always bringing you all stuff that no one else brings you even close to us. So guys, here's another one that you should shine for. International Potluck, Thursday, October 25th, from 12 to 1:30. Yeah, is that you?
No, well, social and culture committee is gonna sync up with diversity and inclusion, but we're actually gonna meet about it today, but 12:30 to 1:30 is that I don't have details.
Great, guys. Just save the date, guys. That will be fun, and some delicious foods that maybe not had before. I'm sure we can get Anya to do her, whatever they call those little.
And Jim?
What are they called?
Oh, I don't know. I was just gonna add that Jeremy will be speaking at team meeting before that, so hopefully we can get lots of people to vote.
Cool. Jeremy will be speaking at that meeting.
Chartmaster.
Jeremy Trask is our new chart master.
So 10 to 12, and then you can get right to lunch.
That's right, Jen. Thank you for setting that up for
Sure.
us. Liz, thank you so much for setting it up for us. It's absolutely great, okay? All right, R3.
Yeah, my favorite time of the month. I get to hand out the first listings, and I hope you guys are here, because if not, I'm just keeping these. All right, so who's up? First listing. Simone Gordon Edwards. I'm keeping it.
No, give it to my grandson. I'm
Congratulations.
giving it to my grandson.
Yeah, because they're two grandsons.
Exactly,
All right.
exactly right, yeah.
And then Soledad. Where is Soledad? Where's Soledad?
She is on vacation this week.
She's on vacation this week? Okay, all right. So yours will be downstairs in my office, but Simone, grandson gets it. No, I'm only kidding. Congratulations, you guys. I know how stressful and how hard times are, and you broke through the ice and you got your first listing. So congratulations.
Wait, let's give my hand on, yay! First closings.
First closings, and I like this. It has peanuts. Jordan Rush.
Way to go, Jordan.
Kelly and Co's team, right?
Yes.
Kelly and Co. Okay. This will be in your box, Jordan, for whenever you pop by. Congratulations. All
One
right.
more?
One more, and Luisa Castro is on whose team? Kyle team. So we make sure there's something in the hot box for you. Simone again. All right, congratulations. And Will.
Way to go, Will.
Congratulations, Will.
Yeah.
Lots of first closings, and now you get to do what?
Let's give my hand. I was meeting with a couple of people that are thinking of joining our office, and they say, what's the biggest difference between, and they mentioned a name, but I looked to who it was. It's one of the more traditional companies. And I said, biggest difference is, of course, is our training. No one out there has a kind of training we have. But I said, but also here you cap. And she said, well, I met with two other birds. They're not talking about cap. I said, well, you don't cap there. You keep paying them. And if they say you're on at Berkshire Hathaway, you're on a 7% split there, it's 7% minus what? 6% franchise fee. So I said, so you're really on a 64% split, and that does not change until you make more money. So guys, you will always pay that money. So I love talking about this advantage right here, which is our cap. So guys, I love being able to hand out these caps. There are new cappers in August. And the first one is Caitlin. Let's give her a hand. Way to go, Caitlin. Way to go. Congratulations. Allison, let's give her a hand. Way to go, Allison. Yay. Let's give her Allison. Angie Bertino. Way to go, Angie. Capped again. On Friday, there you go. The Bashira's capped again. They capped more times than I've been here. So guys, good way. Congratulations to Phil and to Brenda. Congratulations. Maria, where are you? Let's give Maria.
This is her first time.
First cap, let's give her one more hand. First time to step up. Congratulations, okay, guys. Joanne Freebie. Joanne, congratulations. I'm proud of you, girl. She's capped multiple times. Janet, way to go, Janet. One of our great commercial agents. Way to go, Janet. I'm proud of you. Colt Kelly, way to go, Colt. You did your thing, brother. I'm proud of you. Ryan Lewis, can you bring your cap again? Way to go, Ryan. I'm proud of you, Ryan. Deja, way to go, Deja. Deja, first time capper. Way to go, Deja. Brian McDaniel, been here longer than I've been here. Way to go, Brian. Proud of you, buddy. Stephanie O'Rourke, way to go, Stephanie! Congratulations! Carrie Qualter! How many times you got? A bunch.
A bunch.
A bunch, you got your bunch, yes. All right, and we get another hat here now. And Jordan Rush, way to go, Jordan, on Kelly and Coach. Shout out to Jordan, way to go. Phyllis Simone, way to go, Phyllis. I'm proud of you, Phyllis, way to go, girl. Stephanie Venable on the Jan Hillback team, way to go, Stephanie. Proud of you. Lessons learned. Rob, you have anything for us today?
You know what? This isn't a lesson, but it goes back to the win-win situation. So, one of our agents had a deal that at the very end, was supposed to close today, and on Friday he found out that the deal died. All right, the buyer for his listing lost her job, right? And so, as an old mortgage guy, one of the things, and he was really upset that, how do I find this out at the very end? You know, the lender didn't do their job, and you know, blah 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 blah. I'm like, let's step back a second and let's look at the process of what happens when a loan is getting finalized and sent out for documents. So two major things happen. One is sometimes they repull credit, right? To make sure that they didn't go buy the brand new Ford F-150 Raptor and have an $800 a month payment. And the other thing you do is, what is, so the mortgage guys in here, what's one other thing you do?
Re-verify.
Verification of employment.
Verification of employment. So, and in the beginning, right, there was verification of employment. Pay stubs, W-2, sent out a BOE, and at the very end, they just make sure that you still have a JOB. She got laid off on Thursday, so loan gets killed, right? The listing was a listing here in East Cobb, went up, and it went under contract in one day, just about 4 weeks ago. The agent was pretty upset. And I said, let's step back a second. And, you know, there's absolutely nothing you did wrong. You have to manage the expectations of your clients who are not going to be happy. And then it turned into the earnest money. We get the earnest money, don't we? I'm like, no. So at the end of the day, whether they get the earnest money or they don't get the earnest money, what is a win-win in that situation? So if you put yourself in the buyer situation, who 1 week ago is probably moving out of the home she was in, right? Has lost her job, right? And could lose earnest money of $5,000. Is that $5,000 in her situation right now? To that person, probably feels like $25,000, right? So, and I was just coaching him to, hey, step back. Good news is, property here in East Cobb, you're going to be under contract again. Your sellers are going to be fine. Yes, they're going to be inconvenienced, right? But think about everybody in the transaction, and you know how that karma can work and not work. So what is in writing and in a contract is not always what's morally may be the right thing to do. So I would just caution you when you're going through your deals, the main point of every deal, obviously contract's important, right? But what do we spend most of our time doing from time you get your seller or buyer to you close? Terry and I were talking about this the other day. It's,
Communicating and managing.
yeah, I call it, I spend more time being Dr. Phil than I do about anything else. And when they getting all their feelings and everything, because they don't do this every single day. And I jokingly say, hey, is this that Dr. Phil moment? You know? And it just takes people down because, hey, if the guy works at Home Depot in, you know, inventory management and everything, that's what he does every day. And he thinks we're messing up or whatever. And it's nobody's fault that the person loses a job, right? And 3 days before closing, so they were living somewhere else, right? You got to think about that. So just come from a humbleness and try to, you know, use emotional intelligence in your situations. People are going to fly off the handle. That's great. Just let them go, and then it'll dissipate, and then you can have a quality conversation about, let's think about this. So that was something that I learned and was able to help someone with this week.
So what happens to earnest money when the seller and buyer cannot agree? What happens to it?
You get involved.
Pardon me?
You get involved.
Exactly right. If they cannot agree, what's the contract say I can do?
Interpleaded.
Say it again?
Interpleaded.
It's exactly right. What does that mean?
It's out of everyone's hands.
It means that I hand the money to the court and say I cannot make a decision. Now I've got to make sure that I've looked at it and I can't make a decision, because if I put it in the court and that judge says, this is easy, Mr. Alexander, you should have been able to figure this out on your own. So we'll make you pay for this, all this. But when the money goes into the court, the first thing that happens is that guess who gets paid for their lawyer fees, et cetera, first? Our lawyer gets paid first. He or she gets paid first. And so guys, it goes into the court and we say, we cannot figure this, too complicated. And guess what's gonna happen? You all figure it out. So this is soon to be my 40th year in real estate. Many times I've been a broker for 27 of those years. You know how many times I put it in the courts? Because guys, I typically say, guys, if you put it in the courts, you're gonna both lose probably, because all of a sudden, you're gonna have our court costs come off, which could be $1,500. So what's $5,000 minus $1,500?
35.
And all of a sudden, the court may amount to, so guys, we try our best to make it a win-win.
And how soon are you gonna get that money?
Huh?
Take a while.
Months. It takes a while because the court's backed up, but this is not one of the ones ever put in the front line. And you have to try this. So guys, we try our best, and you all do a pretty good job of managing the process. But guys, if you can remain calm, please don't ever look at the seller and say, you're gonna get this earnest money, I know you are, because what the contract says. Well, you don't know that, it's not your decision, it's mine. So guys, please don't do that. Even though the contract is very clear, we gotta hear everything about it before we do. So guys, it just, the earnest money typically takes care of itself. They split it or something, guys. But if you remain what? Anytime you get excited, guys, it really is a good thing. So, because I understand. So, I want to talk a minute about how the buyer has changed from the spring market to today's market. Rather than talking about this afternoon, and what that looks like. And so, I'd like to start by asking you all the question. Because I love it when we have a conversation. I don't think I can just talk all the time. But give me some ideas of what you think has changed from the buyer that was showing up in March to the one that's showing up now. And I'll start with you. How do you think it's changed?
I think tensions were a lot higher in March.
What was higher?
Like tensions.
Okay, I get that. Okay.
Like everyone had kind of PTSD after spring market, you know, so they all had to like, with the interest rate hikes, everything, like everybody kind of like needed to take a break, but there was a lot more of a sense of urgency in spring. And I think it comes from, we knew the interest rates were gonna change. We knew the inventory was low. So they were more motivated. So we didn't have to like drag them along.
Okay. Okay. I like that. What else has changed? Liz, what's changed? I'm gonna come to you next, Gary. What's changed, Liz?
Just the calendar year. We always have that yearly drop, August, September-ish.
And what changes in August, September?
School is back in session.
right?
Right.
So fewer what? Fewer buyers?
Fewer buyers.
I like that. No, Carrie, next, Carrie.
In the spring, buyers did not care what the market value was of a home. They just wanted to win
Value.
the house. And now they really want to understand the market value to make an offer.
They do or they don't?
They do.
And on top of that, because that's so true, they just wanted something, right? And it was, they were just going with the flow. The herd was running that way and they did it. But when they got in contract, and if they were lucky enough to have due diligence, what was happening in the next 24 hours? Yeah, buyer remorse. Oh, I talked to my dad, right? And he said, you're crazy, you know, and
What's my dad in Chicago?
yeah.
About the Atlanta market. I love that. What else? Shelley?
A little bit in disagreement with you in terms of value. I feel that buyers don't know what to do. They're looking, well, not disagreement, they are looking at us to say, is this house really worth it, or they are overpriced?
Exactly.
And it's our job to tell them that do we feel this specific house is overpriced or not?
Okay.
In addition, I do feel that a lot of agents are there, of course, not in our family, not in our KW family, that have no idea how to price a home. Okay. And we not only need to educate those buyers, we need to educate those agents.
Okay. I like that. I like that.
And how confident were all of us, right, as good agents who do this all the time, when we were writing a contract in March or April, and you're like,
Exactly right. Yeah.
hey, listen, you know, and what were we doing to really, because it was an educated guess of what, I mean, if something was on for 500 and then it went for 600, you're telling your wife or your husband, I cannot believe, and what did we have to do to protect ourselves? And it really wasn't protecting the buyer. What did we do? We got rid of contingencies because we knew it could blow up.
And lenders, how many loans did y'all turn down this year because they didn't appraise?
Not many.
Yeah. How many not many did you guess? I mean,
Gosh, I don't remember any that they couldn't work out. I mean, I'm sure there might have been a handful, but.
We had I had 5 out of about 80, and 4 got turned around, and then one of them, the seller came down in prices. So they all closed.
How many of you are surprised that we didn't have more loans turned down because they didn't appraise?
I'm not. I'm not.
Okay, you say you're not. Why are you not?
I'm not surprised because the buyers, for some reason, had money for that appraisal gap. I have never seen so many young people.
That was the first thing that changed.
With so
Right.
much money,
Right.
these young people
First thing
had
that
so much money
Mhm.
saved up that they had $50,000 for appraisal gap. 60,000, I'm like, wow, living in grandma's basement paid off for the last 5 years. I'm
Okay.
serious.
Yeah.
I like that. I like that. So guys, years ago, the rule was, and this is before you guys were even in real estate, most of you, was that the banks would approve what the seller was willing to sell the house for and what the buyer was willing to pay for it.
That was the real market.
Huh?
That was the real market.
That was the real market. Yeah.
Yeah.
If you want to pay $600,000 for this $500,000 house, go for it. Because you're going to be in the house how long? Probably 5 to 10 years. So we didn't care about that. Yes, sir.
I think the cash buyers drove a lot of that. I mean, I think last year was like 70% of the deals were cash. So they inflated the market to make the appraisals come in high.
I hear that. I
It
hear
wasn't
that.
that high.
I hear that.
I think the number was, it was over 50%, I don't know the exact number, but inside of that 50% was a majority of power buyers who, hard money, hedge funds, but also for Tom and Susie who live here in East Cobb, they were still a cash buyer, but they had a power buyer, either Homeward or something else that was putting that cash
Yes,
up.
exactly right.
So in
Exactly right.
FMLS, it said cash.
Yeah, but
but it really wasn't.
But they have a loan
Yeah.
after they get the
Yes.
house.
Correct.
Within 30 days, they're closing on a loan.
Right,
Yeah,
exactly.
so that's a little bit different.
But Ribbon makes you look like a cash buyer or homeowner.
Correct.
So when you go
Exactly.
into a competitive
Yeah.
situation back in the spring and your buyer looks like a cash buyer, so,
They are.
you know, the seller's like, wow, you know, that was, and yeah, Eric, they do, a lot of them eventually do
30 days.
get the loan. But that
Sometimes the
was
loan's already
huge.
approved. I mean, ready to go.
Right.
They're gonna be calling you for business too, 'cause
And I don't remember, Jeff, on Milo, what was the interest rates in February and March?
What was that one?
What was the interest rates in February and March?
Three,
Remember?
no, three,
Or,
no,
three,
what is that?
three and
Yeah.
four.
3.5.
3.5?
Mhm.
3.5? And today they're 6%?
Or under.
Or under, but 6%, so has this changed the way buyers see things?
oh yeah.
How's that changed?
In our point of view, for those buyers who has the limit in terms of qualification, the qualification is gonna change. It's gonna decrease a little bit. But every time that we have changes on interest rate, the borrower is gonna freak out. It's like the rates are the worst and it's increased and my monthly payment is gonna increase $200, $300, $400. And it's just changing $80, something like that. But so with the human being as a buyer, I mean, it's understandable that you're gonna freak out a little bit and say, I'm gonna pay higher value on homes and then I'm gonna pay a higher monthly payments. You know, but that's when we have to talk a little more with them and explain the situation and take more time on talking to them about what's going on.
Well, one of the things on that is right, because payment change. We're all payment buyers, right? Anyone's getting a loan, it's a payment buyer. But it goes all down to emotion and, so when you're looking and rates have gone from 3.5 to 6, right? If they don't change loan product or anything like that, and you're going from a typical 550,000 swim tennis neighborhood to maybe a $450,000 neighborhood that's not swim tennis, might not have an HOA. So to the moms and the dads out there that are looking to have that lifestyle for their families, it does change. You can't get in that neighborhood now, maybe, or you got to come up with more money.
So what is the script that you all use? Adrian, I'll ask you a question. When you know that their interest rate been looking for 6 months and going up, what's your script for your buyer right now? You have one?
Well, part of it depends, if they're still renting, they're still making a very good investment, as they'll be building their own equity. That's the biggest thing.
Okay, I like that, that's a good answer. Anybody else have a script they use?
And I always talk about, and I pre-qualified, I said, I am not a loan officer. And I asked the question, are you aware of a 2-1 buy down? And they're like, no. And I said, okay, I want you to talk to any of the loan officers that they have, and I want you to specifically ask, what is a 2-1 buy down? Because you can buy your rate down, right? So give people options, give them lots of options, and I always go back to, okay, so you're renting and your rent is what? $3,000? Okay, what's 3 times 12? And I act like I don't know it. And then they self-discover and they go, $36,000. And I'm like, yeah, $36,000 that you're not using as equity, building equity in your own home. $36,000 that you're paying to your landlord. How does that make you feel?
That's landlord, they're great. What's your script for?
So let's remember what your motivation and your goals are.
I like that, I like that.
And
Has the motivation goals changed since February, March?
No.
Have they?
No.
No, not at all.
Not at all.
and remember, you can always refinance later.
Yes.
How do people know what refinance means? We never done it, have we? Refi.
Marry the house and date the rent, right?
But I like motivation. What else might you say to Byron when you're talking about that? Yes, sir.
No, it's just, I'm right there with Eric on all that, and it's just, you know, let's set the interest aside, the payment, can we afford the payment?
Ooh, there it is, said, can we what?
Can we afford?
Can you afford the payment?
Right, and if we can, and we don't, and a year from now, it's up 1.5%, how are you gonna fill that? And if it's down 1.5 and you bought today, you're gonna be excited because you're gonna refinance. So there's no better day than today if we just settle that aside.
Because when I bought, can you buy 14%? 14%? I didn't even question like, well, that's what my payment is. My payment's whatever it was. Of course, it was a $50,000 condominium. So you know, guys, but it's like I didn't even care what the rate was. It's just I could afford the payment. So guys, a lot of us in this room are scaring our clients. Oh my God, you gotta buy soon. Guess what's gonna happen? The rate's gonna go up. You can't afford it. Quit saying that. Probably not you guys. Probably people are sitting at home, not in this room. And what did you tell them last week in the class? They need to have their butt.
Oh.
Come on, Paige.
Quick, Paige.
You need to pick the phone up. You need to contact your data bank and remember that it is your data bank. It is where all of your money is. Go and take those withdrawals now and contact those people that you moved 2 years ago. We used to say 3 to 5. A long time ago, we said 5 to 7. Now it is 2 to 3 years ago. If you move someone, contact them. It's time to move them again. People are going back to work in the city. They don't want to live in South Forsyth anymore.
And you all, the thing is that they listen to the press out there. Press is telling them what?
Sky is falling.
Say it again.
Sky is falling.
That sky's falling. Guess what? All the people pay too much for their houses. Guess what? You're going to lose money. Houses are going to nosedive. And those people at MSNBC or Fox, whoever's saying that stuff, they're idiots because that's just not true. How many of you think that the housing market is going to fall in the next 5 years? Just die? I don't think that. Because God is not making any more, what we say? Dirt. Any more dirt. He's out of that business. He stopped it. Now, if you live on the ocean, you're like $1 trillion because you can figure that part out.
Well, they're planning to go to the moon.
What'd you say?
They're planning to go to the moon soon.
They are, that's right. You live on the moon. That's why we're uninhabitable right now. You have something quickly?
No, what you said, Gary already said it, right?
Yeah.
So what you just said.
Oh, yeah, please read that, Jeff.
Oh, at page 183 of this book. So this is the book that we all have now, because when the last stuff happened, we didn't have this digital.
Yeah, we did.
Right? So Gary wrote it. So market expectations, this is page 183 in the middle of the book. Market expectations are a powerful source of motivation for buyers. And you, real estate agents, want to be the one setting these expectations. It is unlikely that anyone giving your buyers advice, whether from a national columnist, a co-worker, even family, knows as much as you know about the local market. You are the research-based expert. You are the trusted advisor. One of the things I heard this morning, I'm like, okay, I have to confirm that. 85% of real estate agents who are in NAR, they've never seen a market like this. 85% of agents don't know what this market looks like. And how do you become experts is by coming to Paige's class and everybody else.
Paige said in her class, if you're not in team meeting, you're missing it.
And I'm getting dressed because I was running a little late.
The one word I've used more this year than I ever have in my life is decelerate.
It's what?
Decelerate.
Tell me what that
Helping
means.
our clients understand the difference between depreciate and decelerate.
Yes.
So the news is making everybody feel like it's going to depreciate.
Yeah.
And helping those clients understand there's a big difference between deceleration of what's been happening and depreciation. And once they get that, it's amazing how you can see years turn back around.
Okay, Lily, what's the biggest difference you've seen the buyers from that you're working with between February, March, and now?
In spring, buyers were scared to lose a house, to lose a contract. Now they are more reserved. They're looking. If somebody else doesn't need it in the first 10 days, then they have an opportunity to reduce the price.
Well stated. Okay, have you seen any difference?
Yes, and it depends on the price ranges
because I'm working with two clients that they are looking for less than 350, and the market is still the same like on March. I mean, yeah, you can get it anything, and I put the escalation clause, appraisal gap, but the other, one of the scripts, if you would like me to say, that I use with my clients is, okay, Mr. Buyer, do you have a loan approved? Yes, I do. Okay. So this is, they ask me, is this one a good time to purchase a property? And I say, okay, do you have the loan approval? Yes. Do you have the money to purchase that property? Yes. Is your monthly payment affordable for you? Yes. This is the best time for you to purchase today. Tomorrow, I don't know, because I don't know if that loan is going to be approval.
That's what?
Say it one more time, please.
What's the key?
You don't know
I
what
don't
tomorrow
know.
is.
I don't know. Okay, do you have the loan today? Okay, purchase today. Because tomorrow, I don't know if you will have that loan approval.
Okay, do we know what's gonna happen next spring?
No.
You know, tell me, because I want to put the buyer hold, seller hold. Yes, ma'am, Shelley.
I would like to hear some scripts for investors, as buyers from other people.
All right, so can I give you a scenario? I've got a partner and we own just a few investment properties. And there was a house he thinks is worth $250. He's not talked about this. And it was selling for $300,000. He said, that's too much for the house. What should my script be?
It depends on what he's gonna do with it. Is he gonna flip it or is he gonna buy it?
Hold it in rent.
Cash flow.
Yeah.
That's the question. I mean, there's a cash flow.
Yeah. You're a payment buyer still.
It's still there. Is every investment a positive cash flow immediately?
No.
No. Should it
Is
be?
every investment an earning situation for you? And that's the question that you have to ask yourself. Is it an earning situation? Do you pay less on your taxes because you bought the property? So is that an earning, is that an increase in your earnings? Yeah, I mean, if you keep more money, then it's an earning situation. It doesn't have to be a cash flow situation. The depreciation that you can take, the investment that you can make in that property over the first year to renovate it so that it can become a cash flow situation. And the things that we're seeing now, which almost scare me, but I'm just saying that I am bonded with my lender. And if you are not bonded with your lender, you are doing yourself and your buyer an injustice. You must have a relationship with a lender that is a partnership. Do you know that Goldman Sachs is saying that we will go back to 40-year amortizations next year?
What does that mean?
Instead of a 30-year fixed rate mortgage, it will be a 40-year amortized mortgage. And notice that I did not say fixed rate mortgage. So it's gonna be a hybrid mortgage, and we've got to be educated by our lenders. Educated just enough not to get in trouble to say, I know of something that might work for you, please call my lender. But know that there are other products out there that are coming on the market every minute. Supreme came out with a 2-1 buy down. I have people in this room that I know of for sure. I have people in my room that I know of for sure that have never heard the words 2-1 buy down.
How many of you here pre-qualify your buyers? All right, hold your hands up, okay? How many of you here have never pre-qualified buyers?
We haven't.
I never
We
have.
send them to a lender, right?
Because what do? I don't know much about that. Let me send you to my what? To my trusted partner.
Right.
Because I'll screw it up.
Yeah.
I mean, I was a middle school math teacher. I don't know how to do calculations like that guy said. I've never pre-qualified anybody.
It has never been more important. It's always important, but it's so very important that you know a little bit enough to say, call my lender. This might work. I'm in the midst of a multiple offer situation right now that I think we've gotten, that on Sunday, it didn't look like we would get it because they couldn't hold two houses, because they told me they couldn't hold two houses. And I said, call my lender and find out if you can hold two houses. This is the time to hold on to that house and make it an investment. It's time for you to own rental property. This is the third house I've sold you. You need to start keeping them. So, just, if it weren't for having a relationship with the lender, and that's what I'm saying, and all the lenders in here, raise your hands. If you don't have a lender, before you leave this room, 1, 2, 3, 4, oh, we've got 2 over here, okay. Have a lender, your lender. Make it personal.
You know, guys,
And then let them explain what a 40-year amortized mortgage is.
the reason I make wise decisions is I got wise partners. I mean, do I have an attorney that I love? His name is Ed Blumenthal, smartest guy I know. Makes me look smart all the time. Do I have some wise lenders around me? I do. Assistant team leader, do I have one? Oh, yeah. Don't tell. Because I'm still the what? Team leader. Yes, ma'am.
Jim, it just gives you so much more credibility in a competitive situation too.
Yeah.
That you have people at the top of your head, numbers immediately that you can forward, choices that they can make, and that you have your own personal team working with really great people. It just gives you so much more credibility when you're in a competitive situation. Because there's a lot of agents who don't do that. And there's people that I've run into in my short time in this business on the other side of the table who don't have a clue and don't have those resources available. And then you look just so much more brilliant than you already are, that you have people for them to contact immediately.
I called the other broker and said, by the way, Ned Blumenthal said blah, blah, blah. Okay. If Ned says so, it takes it for it. All right, so let's go back to this though, and Rob, help me out with this. What is the biggest difference between the buyer in February, March, then buyer in September, October? Biggest difference. Is there one?
Yeah.
Besides expectation, what do you think, Rob?
They have time to consider and to commit to making a purchase. They have time to talk to their lender if they're pushing on price, right? They have time to feel good about making the decision instead of having to make a decision before they leave the driveway in fear of the other person on the curb that's going in next. So the other thing that they're able to do now versus 5 or 6 months ago is they have the benefit of protection with contingencies again, right? That you can get a due diligence period, unless it's, if it's the best house, hey, it's a full contact sport, contingency is gonna go out. But if it's that house that's been on the market for 10 days, right? And you have a seller that's freaking out because it hasn't sold in 10 days. What's the average? Over your career, how long did it, people, it was 90 days. People were signing, I was talking to Cheever the other day and I couldn't believe this. He was like, every listing agreement I did was a 1-year listing agreement. If they wouldn't sign a 1-year listing agreement, I wasn't doing it. And now sellers are getting freaked out because it's 10 days, right? So there's balance is when there's inventory and buyers are right here.
And they're getting freaked out mainly because of what?
News.
Say again?
News.
Yeah.
What?
TV.
Media.
The news.
Media also, but no.
Not managing
There's another reason though.
Not managing.
Because you're not talking to your,
Say it, Liz.
Us.
Us.
yeah.
I think
Because
our
we've not done
energy
what?
of what's happened, it's interesting, because I had my aha, is the buyers still wanna buy. It's our energy of, wow, it's really shifted, and it's kind of, it's a perpetuating kind of behavior in a way.
It is.
If
We gotta get out of our own
buyer is
feelings.
freaking out, it's because what? You haven't told them, or they didn't do what? They listen to you. They don't listen to you.
People on both sides of the equation don't listen to us.
Exactly, Lily, exactly.
Sellers still. Sellers still expecting above list price offers and much higher than list price. Buyers sitting and thinking, okay, if in spring it were never sold for, let's say, 600, why should we offer today 600? We need to offer 580, 540.
I mean, why do you think the seller is still expecting above
Because
list
we're not
price?
managing through the situation from the get-go.
Oh, so that means that we're allowing them to allowing us to put a sign in their yard with unrealistic expectations?
Yeah, and whose fault is that?
Yes.
And even if you think you're right, and you're like, all right, I'll do the push with you for another $25,000. As soon as that sign goes in the front yard, who are they ticked off at when you have to go down? It's you. So
Here's the other thing that we're doing, and I had to do it yesterday, and it was difficult. But I have a house that is absolutely fabulous. I mean, it is so gorgeous. It has a pimple on it, or it would have already been gone. It has a little pimple on it. But I've only had it listed since the 26th of August. Normally, it would be a 30-day market update in a normal market. 30-day market update. Okay. Now we are doing half of that. It's been on the market for 2 weeks. It gets a market update appointment, face-to-face appointment. I went and showed them a new CMA. I showed them the 8 houses that had gone on the market since we listed it, that had gone pending and that had closed. And I said to the people, very straightforward, I need 1 or 2 things. I need time or money. Which would you like to give me? And at that point, I solidified the expectations of the seller. But I did it in a hurry, and that's what we've had to do. We've had to take out every single checklist this thick and revise them from back. And how many days is it that we do this? Make your action plans to today's market, not when you could wait 30 days to tell somebody that something wasn't going right, or that we were aware that it wasn't going right. When I listed that house, I told the people, this is a drive under at $1 million. It's got a pimple on it, but it's gorgeous. It's gorgeous, and it's gonna take some time for that person to walk through the door and buy it. Am I right?
Yeah.
What did they choose? Age?
Time.
Time.
Absolutely, because what do you go to, 700? I mean, you go to 925, what's the difference? 950, what's the difference? There is no difference. Somebody that doesn't want a drive under
They're
isn't
never
gonna
gonna want
buy
it.
that house.
That's right. They're deal breaker. I mean,
There are deal breakers. I also have another one that has a little pimple. It has a little power tower next to it. So, I mean, today is the day of the pimple. I had one tattooed on just to make sure that I fit in.
Sir.
Who do you think we might have a stats review? Is that a question? Because, I mean, the stats, we have to roll these out to ourselves.
That's gonna be Jeremy in October. He's gonna do a 2-hour overview of the quarterly and MMO. So
We
he's
have a
gonna be in
meeting
town.
one pretty soon, though, just to sort of brief with Marty, I'd love to do that, but that is fabulous.
Are you volunteering?
I was thinking our brand new assistant teammate, I could team up with you.
Hey, I love stats. I took it 3 times in college. Third time's a charm.
I failed it.
Yes.
Yes, ma'am, Liz.
That was huge. I think that, I remember years ago, John Ellinger got up and said, I love buyers because you can keep looking and looking and looking and looking. Listing, you get it all pretty, sign the yard, and you're like, what do you get stand there with the sandwich board? To sit down in front of a seller 2 weeks into it is brilliant. Because it's not comfortable, it's not fun, but we've got to exercise that muscle again, because it's been a long time since we said, guess what, your basement kind of smells like dog?
Yeah.
And it smells like dog, and that's been the feedback.
What have you talked about, Liz?
I haven't been more.
But to force yourself, almost to say like, when we get ready to go, let's book our next, please God, we won't meet. But to say, listen, if we are looking at each other in a couple weeks, we're sitting down.
So in the buyer consultation, what are you telling your buyers right now has changed? Are you having a buyer consultation?
Absolutely. Yes, always.
And are you having an update one in 2 weeks when they didn't find what they want? How many of you remember at any time in your history of selling real estate, when you found the buyer at their house in the first 45 days? First 45 days? You find it? Right. So can you typically find what a buyer's looking for within 45 days? And now can you find the buyer within 45 days?
Sure.
Sometimes.
Yes, it's harder, but
Sometimes.
yes,
It's a little hard, but you can. Okay. So has that changed?
No,
Not really.
not really, not really.
I think it's.
Maybe change the criteria a little bit. You know what I mean? Yeah, exactly right.
I've never been more excited to work with buyer, like the opportunity to work with a buyer comfortably. Meaning you don't have to have the offer written before you even go out to see 3 houses.
For 3 years, we were like, you want to buy? I was like, oh, I can't hear you. I think we have a bad connect. I mean, buyers were not fun. It was a madhouse. Now, like, a buyer's awesome.
Sellers
There's
not so
potential out
fun
there.
anymore right now.
Sellers
are not really fun right now. They're
An educated conversation.
Oh,
That's the
And that's the good news about MSNBC and Fox is they're telling you better sell quickly, make us guess what's gonna happen. You're gonna lose money in your house, sell it quickly before it goes away, which goes, like, Reed, what did I tell everybody in 2011, remember?
I sure do.
What did I tell them?
Over every meeting we sat in here, he said, y'all are gonna look back and be sad that you didn't buy real estate. And most of us were like, yeah, but money's tight right now. I don't know.
Prices are high.
I don't know what we thought. I mean, it's just, we were worried about what was gonna happen and we didn't buy. Well, I bought one.
Yeah.
Is anyone showing, the buyers, the job, how the job growth is right now? Cause that directly also relates with like how the economy is doing. Is anyone showing that to their buyers? Like, because I know jobs are up, like in August, I think there's been job growth. So when you can sit with the buyer and be like, I know you're seeing these headlines, but here are the stats in terms of job growth, and it's directly related to the economy too.
I would not,
Depends on
I would
buyer.
not jump into that,
No.
with a 10-foot pole, I'd say, oh, you got questions about, economy and how it affects interest rates and everything like that? Let me put you in touch with my lender.
Absolutely.
Because no matter what you say, you're not gonna win. So, take the tie.
So what's changed since March to now? Number one, interest rates are what?
Higher.
Higher, they've changed, okay. Are there fewer or more houses right now?
More.
Days to market's what?
Longer.
A little bit longer, exactly right, Jess. So which houses are the exception of that rule?
Good one.
Well priced.
Well priced ones?
And under.
Moved in ready.
And lower price.
Under 300?
Under 300, exactly right. What else?
Move in ready.
What?
Move in ready.
Yeah,
Move in ready.
I was gonna say that earlier, actually, that, buyers are pickier now, right? Updates, staging, those things are important again.
Yes.
And I'm careful when I say that anything about the rate. What I say is instead of saying the rates are higher, I go, the rates are normalizing. I think it's really important for all of us to go, the rates are normalizing. Because that will open up conversation. What do you mean it's normalizing? Well, historically, they're 6.8% with great credit. Because not everybody can stroll up there now and get 6%, right? You have to have great credit. If your credit's horrible, you're gonna get 7.5. And thank God you got it great so you could buy a house. So it's normalizing.
Kettle is not whistling.
No, my rate was 14%. The rate's at 6 or 7%.
I mean, the millennial buyer doesn't care.
Say that one
They-
more time.
The millennial buyer, who's the first time home buyer right now, doesn't care what they don't care what the rate was 5 years ago or what the average rate was. They care that when they started looking in March or even in December, that their rate was low threes, mid threes, and now they're in the low sixes. But they didn't do anything wrong.
The friends,
You know,
So they're thinking,
and
oh,
their
do we need
friends
to
got
wait?
in a house,
And they
yeah.
didn't love the houses they were looking at then, and now
Yeah,
they have to
but
look
I
at.
think
Right.
the difference right
Correct.
here is they love to understand what's going on.
Yeah.
So if
Absolutely.
you explain.
Data.
But like,
some
but we
of
keep
that, they're
talking
gonna
about
have like a,
conversation.
Man, we keep talking about what?
But we keep talking about like, but this is the
Managing.
average, this is the norm, but like, this is not the millennial home buyer's norm. So we have to stop comparing it to what our parents did as a millennial and what it used to be. And okay, so this is like, I was saying, like, we as millennials care about being educated on what's happening right now. But we don't care about yesterday. We care about what does it mean for us.
Alright, so that's why I think, I'm sorry, Yvette, I mean, Hathreen's point was exactly, do you wanna spend $36,000 a year on your rental, or would you rather take that money and pour it towards your down payment?
And that's the
That-
pain
that-
point.
that is
That's
what's
the
going
pain
on
point.
right now.
Exactly.
Yes.
And here's the other thing is, and this is straight into the wind as a buffalo would run. And everybody get that, run, charge the storm, go get a new buyer pool.
Amen.
So, but
They
listen.
were looking at 3%, and they didn't find a house.
That
You
ship
did not
sailed.
find them a house at 3%. Then you're gonna try and find them a house that they like at 6%? Go find another buyer. That's.
So I hear you, but also like KW harps so much on hit your sphere, hit your network, hit your neighborhood, hit the people you know.
You have
Those
more-
are the people I know.
You
My
have more
network and
people.
my sphere are millennials.
Well,
And so,
millennials
but
are
we're all,
second-time home buyers now.
not all of, no, I have a lot of first time home buyers for millennials. A lot of, some are second, like the elder millennials, but we also have
The
like
golden
late
millennials
twenties.
are the sweet spot now.
So
If
the,
you haven't heard that term,
What
write
is
it down, because you need to know it. The golden millennials are the sweet spot now.
And guys, the thing is
What is
that
the golden minority
your
to 45?
perspective,
Oh.
How
your
old?
perspective,
40 to 45.
That's Gen X.
your perspective is your perspective. The way,
Yeah, right.
you know, something, interestingly enough, you
Say
take
that
the
again.
perspective,
40 and
Say that again, sister. Say that again.
you have these children back in the back, Mr. Hayes.
So sorry.
Everybody used to go there, school principal, remember that?
I bet you that's
Your
age.
perspective is your perspective, the way you
Yeah.
see things.
Right.
And you even think it's right. I think my perspective all the time is 100% right, because, I mean, I'm old and wise. But guys, your perspective is your perspective, I mean, the way you see it, people that you relate to, that's you. And guys, and so, the good news is, in this room, we have people that are working with this group, and this group, and which is a cool thing. The people that work with different groups, so guys, your millennial buyers see things differently than I see it. And I realize.
Some,
I realize.
Not all.
Some of them.
some them,
But you're
cause
right,
I
but
have
the
a
rents
bunch
go,
of
when
them.
Not all.
my
I think we
three
gotta
bedroom
put
Not
condo,
all, thank you.
Exactly right, yeah.
townhome went from, I was getting 1,800, I booked it to 2,100, and the lady's like, I really don't wanna leave, I'm like, sorry, I already rented it to the next person, you gave me your notice. She had to move to a 1550 one bedroom by the back, not by the battery, by Powers Ferry. One bedroom, 1550, so another thing is too, is the rents are crazy.
And that's what you have to be educating the buyer who says, yeah, I missed the boat, but so I'll just wait.
You have to find the
What are
pain.
you waiting
Yeah,
for?
say it one more time.
You have to find the
You
pain.
have to find the pain, what their pain is.
Yes.
Right.
And align yourself with the right people.
Right.
So you can say, oh, I have so-and-so who can educate you about different programs.
Exactly.
You know,
Hey, guys,
and the monkey's off your back.
this is the discussion that I live for. So we're having a very healthy discussion, and we're learning from each other, guys. There's not one way to see anything, there's multiple ways. Because you have to see it multiple ways. But last but not least, yes, ma'am.
Yeah, I was gonna say, because I have a lot of first time buyers too, that the percentage is going up 3-5%. I've never known a landlord put the rent down, and you're paying somebody else's money. So let's stay focused, so you can get the money you want that you can afford.
And that works. Having discussion works.
Same point, 2,000
Long
plus.
Is there a cap on what somebody can raise the rent?
No.
No.
The cap just
Georgia
comes
doesn't
back-
have a rental cap, like a raise.
Like at one shop?
Because it's like, if I put my rental house from $1,800 up to $5,000, is it gonna rent? Probably
Yes.
not. It might, who knows?
Depends where they're coming from.
Exactly right, doesn't it?
Well, I've got one in Indian Hills right now that I have on the market for $3,000 a month. And the market has told me that I have finally gone over the edge.
Wow.
You guys know, if you have listings, half of our offers are from investor buyers who want to rent, if it's that type of house, right? I mean, seriously, in the last 6 months, sometimes more than half of my offers were from investor buyers that were rented, to rent, buy and hold.
And they're not as worried, the major hedge funds that are buying this, they're not too worried about the cash flow side of it because they can make it up in volume. And what they're buying is why it was always best to buy a house 5 years ago. They're buying the appreciation.
But we are seeing funds
Yes.
Yes.
pull out right before closing. They'll pull 10 deals.
Make sure you know that they're working with a lender, that they, you know, deals are falling apart.
No, I was just gonna mention that I listed a rental last night. Well, really, it was like 4 o'clock in the afternoon for $3,700 a month, and I have multiple offers.
Yay.
Where
The
was
rest
it?
of it's me.
Yeah.
I get your deal, right?
where was
I get
it?
your deal.
Share.
I get your
It
deal.
might have a blue.
Roswell. Downtown Roswell.
Yes.
So that is intrinsically what's changed between now and February, a whole lot.
Yes. Perception
Some
is a big part of
attitudes.
that.
Attitudes change, exactly right, Jim? Yep. Yep. A recession is mostly what? Mind. It's a mind game.
Perception.
Mind game is a mind game. But you know, once you think that something is what you believe it is, it's hard to change your mind, isn't it? No matter what the subject is. I mean, and that's people that believe strongly what they believe in. It makes sense to them. It's like I believe it because renting is better than buying because I have more options.
Jim, I think this is, I mean, I've heard somebody say, don't confuse me with the facts. And the reality is, most of these decisions are made on emotion. They are not based on facts. And I think that's where that listening and figuring out what really is driving this. There are some that are going to be driven by numbers, right? But there's a lot more that are going to be driven by the fact that, man, I want to have a house, I'm sick of renting. Or I've got to have a house, we just had another kid, or et cetera, et cetera, et cetera. And I think from y'all and us, that initial, just let's listen, let's figure out where this person's really coming from so we know how to serve them best. Because for most people, they need to buy a house.
Yeah. So data and facts beat everything, right? For emotion, right? Facts put in front of people with good data allow them to relax. So recession. The last 6 recessions we had, every single one of them, we had appreciation except for 2 of the last 6. One was 2008 and 9. Throw that out, right? The other recession, we went backwards on values 1.9%. So recession. Great. What color house would you? What color? Let's get you in there because it's going to go up over time.
And Rob, to your point, I was listening to Gary and something none of us brought up. Gary was talking about the current market and the state of the buyers, and he just simply said, and I like how simple he is, go find the motivated.
Yes, always.
Yep.
Should never be
I just
thinking
want to
about.
echo that because I mean, we've talked about facts. And I mean, there's study after study after study that says all decisions start with emotion. You know what I mean? So we can throw facts at them all day long. If we don't have the emotion and why
The motivation
to guide them through the facts.
Something Sean used to say all the time, I think summarizes what you guys are all saying, is when your client's being really emotional, you need to fight that with facts. When your client's being really factual, like, I'm not sure if I'm paying 2 pennies too much for this house. You fight that with emotion, and you go back and say
Yeah.
what your emotional.
And find
It's a
them
goal law.
motivated. Find them motivated. I bet you right now in our sphere of influence, we have some young guy who's making $250,000 a year. I do, right? I sold him a house back in 2007-8. It is time to have the conversation about buying an investment property, and we are having that conversation. And he's gonna buy 2, one here and one in Philadelphia. He's very motivated. Find the motivated. The other people who wanna wait, let them
Explain to
wait.
people that they are motivated. Get them motivated. You know, if you
Make
know
them
they
sick,
should
then make
be
them well.
motivated, You know they should be motivated. Just like Green said, that, you know, if you know that this person should be buying 2 investment properties, get them motivated.
Jim,
Yes, sir.
one quick thing, I've got a tool that I could help you guys with, if you've got an investor who's thinking, and they're like, I'm not sure, we've got a tool that we can put in the purchase price, the area it is, and it'll show them over 9 years, projected cash flow, and it's a pretty helpful tool, if it's the person who really wants some data, so we can do that.
How many people in
I
here
want
want
that.
the data before they make a decision? Hold your hands up. Who likes data more than anything else?
Not more than anything else.
Who likes emotion more than anything else?
I'm a high, all the feelings. How does it feel?
Yeah.
I don't
How
really
does it
care
feel?
per month. I gotta say, I love this house, I like the feng shui of it, that's just me, guys. Okay, so Rob and I are great partners, just like Michelle, because he's a factual guy. I'm like, if I get 30% of the facts, I can make a decision.
Right.
I don't need a ton of facts. Do you put facts, I'm like, stop.
Yeah.
So guys, if you want the facts, go see him. If you want emotion, come see me. Like this. All right, guys, anything we need to talk about? So let's think like this. So the biggest things that have changed since February and March are, number 1, interest rates.
Yeah,
Okay.
perception.
What's number 2?
Inventory.
Inventory. Yeah, inventory. We got a little bit better. Okay. Number 3.
Sense of urgency.
What'd you say?
Sense of urgency.
Sense of urgency, exactly right, yeah. Number 4. Perception has changed. Anything else?
I think what Liz said, that what we're portraying to our clients.
You know, how many times in 11 years here, guys, y'all come in with, guys, I don't believe this is gonna happen, but I go, no, the sky's not falling. No, the sky's not falling. Do your job, the sky's not falling, it's not gonna fall. Does anybody have any doubt in the next year that if you wanna make a bunch of money in real estate, you can? You can, you can do well. And whatever your excuse is not doing well, get rid of that excuse. Because you either have excuses or what? Results. Pick the one you want. Excuses or results. The reason I don't do well is because I'm not from Atlanta. Oh, that's not true. That's Minnie Bailey about excuses. She'll blow you out of the water. She came here pregnant, and knew nobody and was root through the year. So guys, just think that's, and many of you all have done that. So I'm not, worried about it. But guys, you can have excuses, you can have results. Anything else, Ryan, gonna add to that?
No, next team meeting, we need to make sure we have food, because I'm starving.
No, Rob, I can give you one fact, Rob. You ain't gonna waste waiting nothing. All right, y'all, thank you so much. Great discussion, I love it. I'm going to be right here.
No, don't hear you that.